I'll be teaching you how to draw Fibonacci, how to draw and use Fibonacci retracement, expansion or extension. If you are new to my channel, kindly subscribe to this channel to get notifications for future videos. If you have questions or comments, kindly drop your messages for me in the comments section. And if you like this video, I want you to hit the like button and share this video with friends. Before I explain Fibonacci, I would like to give a recap on my first video on this channel, market structure. Market structure tells you the overall details of market direction and happenings in the market as a forex trader or traders who trade stocks or cryptocurrency. Now, quickly, I would like to give you a premium value before I go to explain Fibonacci. Now, we have three major structure. Please, you need to watch the video I made on market structure for you to understand better what market structure is all about. Now, I just quickly want to drop this. We have three major structure. These are things I've taught the premium guys. I have a premium group where they pay to get education on forex trading, cryptocurrency trading, and stocks trading. All right. So number one, external swing point. Three major structures. One, external swing point. Get a pen, then you can write these three. External swing point. Some traders call it order flow. Order flow. External swing point, which is an order flow. Then you can say we have bullish order flow or bearish order flow. All right. Number two, internal structure. Internal structure. Now, internal structure, you can say you have uptrend or downtrend. Okay. Internal structure is also the same thing as trend. All right. Trend. You can say we have an uptrend or we have a downtrend. Now, these are internal structures. Now, number three is a substructure. It's a substructure. Then these substructures are majorly found on lower time frame. They are majorly found on lower time frame, your 30 minutes time frame, your 15 minutes time frame, your 5 minutes time frame. You see substructures. Now, trend operates within order flow. Trends operate within order flow. So we have substructure operates within internal structure. We have substructure operating within internal structure. Now, internal direction makes up the external direction, as substructure makes up the internal structure. Now, quickly, let me explain that for you to understand better. From this low to this high is an external structure. Okay, is an external structure, or you say order flow. Okay, or you say swing points. Okay, they all mean the same thing. Good. All right. Now, you can say this is a swing low, swing high, swing low, swing high. This is the order flow. Now, this is a kind of what? Bullish order flow. Okay, low, high, low, high. So you can say this is a bullish order flow. Now, which is what I called an external swing point. All right, or external structure. Now, what's the internal structure? Now, this is the internal structure from this same point, from this low. Okay, from this low also. Okay, from this low, okay, to this point, okay, then back to this point, to this point, okay, all right, all right, okay. Can you see what I just did now? From this low back to this point, okay, you can say this is a low, this is an high, this is another low, okay, this is another high. Then you can call this what? Higher low, higher high, okay, then back to this point, higher low, okay, then you can say higher high, then you can say higher low again, okay, then you can say higher high to this point, then you can say higher low to this point, then you can say higher high. That is the second type of structure, which I call the trend. Okay, it is a bullish trend, it is an uptrend. All right, you have a bullish structure, which is what? A bullish order flow. Now in a bullish order flow, you now have a what? Bullish trend. Okay, now the third category is called the substructure. Now where's the substructure? I told you the substructure is better seen on the lower time frame. Okay, you can see from this point exactly to this point, to this point, okay, then to this point, okay, good, to this point, from this point to this smaller point, okay. It is better seen on what? Okay, it is better seen on lower time frame. All right, it is better seen on lower time frame. We can see this low, okay, you can see this came back, broke structure, came back, broke structure, came back, broke structure, okay, then that is your what? Your substructure. All right, that is your substructure. So in a nutshell, you can have the three category: the order flow, okay, you can say this is an order flow, okay, that is an order flow, the impulsive move, the correction, followed by another what? Impulsive move, then with a correction, right, with a correction. Now the impulsive move it's a swing. All right, the impulsive move is a swing, okay, from a swing low to a swing high. Then you have the correction, then you have again the impulsive move, then you have the correction. Now this is an order flow, okay. What type of order flow? A bullish order flow. Now within this bullish order flow, you cannot have uptrend. You cannot have an uptrend. What is the uptrend? Okay, higher high, higher low, okay, my system is not ready to work tonight. Higher high. All right, okay. Now you can see the first one having a massive move, which is an impulsive move, okay, from a low to a particular high. Now with the second category, which I call the internal structure, you can see this one moved almost halfway, okay, as the impulsive move, then dropped, make a correction, then a continuation. So now the third category, which is a substructure, I said the substructure is best seen on lower time frame. Okay, it has smaller moves. Okay, it moves little by little till it makes that full impulsive move. Okay, it moves little by little before it makes that full impulsive move. Okay, so you can see that the substructure is within the internal structure, while the internal structure is within the order flow, that is the external structure. All right, so let's proceed. Now, I need to clarify this before we continue. The use of a Fibonacci. Fibonacci needs to be used with other trading strategies. Okay, now which other trading strategies can you use a Fibonacci with? The use of your candlestick patterns. Candlestick patterns. How does the candlestick form? Okay, you need to understand this before you can just come and place a Fibonacci and use. All right, now having explained the three types of structure, this will guide you on how to use the Fibonacci correctly. Now you know the trend is your friend. Now I'll be talking first on how to use a Fibonacci for retracement. How do you use a Fibonacci for retracement? Now, after every impulsive move, there is always a correction. After every impulsive move, there is always a correction. Okay, and you need to trade in the direction of the trend. You can see from this point to this point, you can say you have a downtrend. From this point to this point, you can also say you have another downtrend. Okay, maybe I need to highlight that. Now from this point to this point, again this point, okay, then this point, all right, then this point. Okay, let me zoom so that you can see. Okay, sorry, I clear that off. So let me do it again. From this point to this point, and from this point to this point, from this point to this point. All right, so let me zoom in now. Yeah, I want you to see it clearly. There's something I'm trying to show you here so that you can understand better. Exactly. All right, now you can see from this point to this point. Okay, then you can place your Fibonacci from here all the way down to this point. Okay, now what makes the correctional move? This is the only correction before the further drop. Now, haven't seen this drop, the next correction is this to this point. Okay, then you have this drop, then you have the correction, then you have this drop, you have the correction, then you have this drop. Now let's place the Fibonacci retracement 2. When you place the Fibonacci retracement tool, this is how you use the Fibonacci retracement tool. Now, for the Fibonacci retracement tool, you need to choose from the first point, that is from the peak. All right. Can you see what I just did? I adjusted. So this is point 1. Okay, point 1, which is the high of this candle, this green candle, then to the low, which is the low of this bearish candle. Now this is from 100% down to 0%. Okay, that's how you place your Fibonacci retracement tool. Okay, so once you place that, then you can see this point. This line is the 23.6%. Okay, then this second line is the 38.2%. This is the 50% Fibonacci. This is the 61.8% Fibonacci. Then this is the 78.6% Fibonacci. Now, I'm on TradingView. Okay, now if for example your MT4, then the default setting on MT4 is this. Okay, so even on your MT4 you can as well see all this markup. Okay, the 78.6, the 61.8, the 50%, the 38.2%, the 23.6%. All right, now don't make a mistake of you drawing from this to this. It is only when you are drawing a bullish setup that you draw from the what? From the low to the high. Since it is a bearish setup, then you draw from the high to the low. All right, fine. Now, there's a school of thought that says we have 3 types of trend. Okay, either a bullish trend or a bearish trend. You have 3 types. What are the 3 types? You have, first one, you have a strong trend. A strong trend. Number 2, you have a stable trend. Then number 3, you have an unstable trend. Now, the strong trend, okay, the strong trend will only pull back after the impulsive move. I said this is an impulsive move. Okay, you draw your Fibonacci retracement on the impulsive move. This is an impulsive move. Okay, now you draw on the impulsive move. Now the retracement or the correction for a strong trend is between the 23.6% and the 38.2%. That is, price will only retrace either to the 23.6 and continue either lower if it is a bearish trend, or continue higher if it is a bullish trend. Okay, or get to the 38.2%. Okay, these 2 points or these 2 marks are for strong trend. Now, for a stable trend will retrace to the 50%. This is the 50%. To the 50% mark before continuation lower or continuation higher for either a bullish trend that is higher or for a bearish trend that is lower. All right. Now, for an unstable trend, the retracement will come to the 61.8% or between 61.8% and 78.6%. That is in the middle of these 2 marks. All right, or come to the 78.6%. Okay, 3 major areas, either the 61.8 or in between, or to the 78.6%. That is for an unstable trend. Now, most times or oftentimes or once in a while, you can see a retracement back into this zone. Okay, can you see this zone? There's no mark in between, so it's around the 88.6%. Okay, it will come to the 88.6%. Now, one very good thing you need to understand about Fibonacci is that when you understand, I made a video on supply and demand. Please watch that video. That video will help you a lot. If you watch that video, you will understand that this point after this impulsive move, this is a supply zone. This is our supply zone. Okay, now let me do something quickly. Rectangle. All right. All right. Okay. This is our supply zone. Now, with this supply zone, okay, okay, and I said for an unstable trend will come back to this zone, okay, before continuation lower. All right. Okay. So you can see that if you have the knowledge of the supply and demand trading with the knowledge of the Fibonacci trading concept, you will have an edge in the market over other traders. All right. Now, quickly, I'll be talking about how to use the expansion and the extension. So after then I will give you, we'll do back test so that you can see how it worked out. I'm removing that. Okay. So back to the Fibonacci. I'm placing it again so that you can have an opportunity of seeing it. You can extend it to the right where price is yet to trade into. Okay, now that's beautiful. Okay, we can lock it. Let me lock it, remove that. Okay, from the 100%, okay, to the 0%. Beautiful. Then price came back to the 38. You can see price came back to the 38.2. Okay, before it continued lower. All right. Now, so I wanted to talk about expansion. Okay, so to talk about expansion, this is how expansion works. Please pay attention. Let me use this so that you understand. Impulsive move, okay, then the correction, okay, then the impulsive move. Brilliant. Now, when you want to place the Fibonacci, this is how I said you are going to place the Fibonacci for the impulsive move. This is for a what? Bullish trend. Okay, you can see what I did. This is 100, then to the 0%. All right, then price came back to the what? To the 60, in between 50. Okay, let me extend it. That. Let me remove it and try another one. Please always extend it to the right where price is here to trade into. All right. Okay, now you can see it retraced to the almost to the 61.8% before it reversed or before it continued higher. Now, for the expansion, you need to do this. You place your Fibonacci from the low of the pullback. Okay, from this low of the pullback. All right. Now, what can you see from here? Let me remove this. Let me remove that. Then use this particular one. All right, so that you understand it. Good. That was what we were having. Now to place another one, you place from where? This is where the pullback. Good. From this pullback all the way down. all the way down. Okay, so what do you notice? What do you notice from this point back to this point is what? Another complete. Okay, this made a complete set from 100% to 0%, then the other one from 100% to 0%. All right, so what do you have? This is exactly what you're having. Run, a pullback, then a run. All right. Okay, so what does that mean? Will this run? Okay, then the pullback could be to a point in the market where you have a demand zone. Okay, let's say we have a demand zone here. All right, okay, price came back to the demand zone, got rejected and bounced off. All right, okay, the same way price drop, made an impulsive move, made a correction move and drop to this point, made another correction, drop again. All right, okay, so that's that about expansion or extension. Now for some traders, they have the extension tool, the Fibonacci extension tool. Do I have that here? Okay, I do. Can you see? No, trade based. No, I don't have. Some traders have the extension tool and they can use the extension tool. The extension tool will just give you something similar with what I just showed you. The difference is this ran from 100 to 0%. Okay, then that will run from here, okay, this point, okay, all the way down, then it will be over 100%. Okay, if this is around the 76 or 78.6%, okay, or let's say the 50%, then it will now be 150%. Do you understand? 150%. Then if it is around the 38.2, then it will now be 138.2, just telling you it has increased. Okay, just to tell you it has increased. So that's that about extension. Okay, I hope you understand this video perfectly, and I hope you can get to work and do more exercises for your understanding about Fibonacci, retracement, and expansion. Okay, you can see, let me do one more. Fibonacci retracement, you can see this from here. Okay, let me use this. Okay, there's something I want to show you. All right, you can see this point, this 1.618, 2.618. okay, these are 261.8. okay, this is what 161.8, okay, percentage, 161.8. that is from this point to this point, then it has increased above 61.8%. okay, then from this point to this point, it has increased above what, 161.8. okay, so that's what it's saying, or that's what it means. Okay, you can see this point. Yes, exactly. Okay, you can see this is above. Okay, this is above it. this is above the 161.8. Price came above the 161.8%. Okay, so that's just what I intend to show you. Price drop, pullback, drop, pullback, then broke this structure. It broke this. This was the previous high. Okay, it was coming from here, low, high, then a low. Okay, then you can see the minor structures, which I call the substructure. Okay, high, low, high, low. Okay, high, low, high, low. Then finally it broke this high. Okay, if you have to talk in terms of trend, this should be the impulsive move from down here to this point. Okay, then back to this point. Okay, this never got taken out. Okay, then to this point, then all the way from this point back to this point. All right. Okay, let me use the rectangle to explain that again one more time. Can you see that? Okay, can you see the box? That is from this low to this high. That's the first move. Now see the second move. See the second move from this low then to this high, where you have the breakout. Okay, is it interesting now? Now see the third one from this low then finally to this high. Okay, so I think you should understand that. Okay, so you can say impulsive move, retracement, impulsive move, retracement, then you have the impulsive move. So you have 3 impulsive moves here: low, high, low, high, low, high. So what do you call this type of movement? You say this is a what? A bullish trend. Higher high, higher low, higher high, higher low, higher high. Then you have this taken out. Okay, here. It's got taken out here. Okay. I know some traders will say here, but let me just give you this premium. This is premium. I don't give it out for free, but I will do that for watching this video till the end. You can see this point here. They are wicks, both for the bearish candle and for the bullish candle. Now see this, the body of the candle here, okay, is below the body of these 2 candles, so it has already been taken out with this candle. Okay, so this only went back for a what? A correction, and this is liquidity grab. Okay, this particular candle took out some others. Okay, then down it went. All right, so thank you for your time. Thank you for watching this video. I'll be expecting you to drop questions, tell me what you understand, tell me what you do not like about the video, tell me what you want me to improve on. Okay, and I would definitely be making another video very soon. My next video will be talking about liquidity grab, or okay, another video will be coming out soonest on support and resistance. The last video was on supply and demand, so the next video should be on support and resistance. All right, cheers.